All right, you ready, Ty? No need for any crazy music in between.
Well, yeah, we better not.
I had another ZZ Top song for you. All right. So just so you know, you got 39 questions. So sorry, everybody, but I am going to have to pick and choose some of these.
I bet it's the same guy over and over again, or the same girl.
Or them.
Right.
Yeah. Okay. How do you choose which cross to trigger a buy sell? Do you just act on each one, or is there some decision criteria? One, yep.
Yeah, excellent question. Because I didn't go into the details, we ran out of time. But what I tried to do along the way is give you the sense that if you're looking at the 60% bucket, or the 25% bucket, or the 15% bucket, which again is going from the more conservative, broadly diversified, easily tracked, longer term trends, less volatility, to the next level, which breaks all of that up into 10 basic pieces. Each of those 10 pieces are broken into anywhere from 3 or 4 to 20 sub pieces. That's the group called 25%, which are sectors and industries. The answer to your question is, it depends on if you're talking about the 60% or the 25%. And within the 25%, it depends on which one you are talking about. Remember, we looked at all 10 of them, and 2 or 3 of them were very different. They were more volatile. They were going in opposite directions. Therefore, when a cross takes place between price and a short-term moving average, or price and an intermediate-term moving average, put in perspective the implications of what it's telling you about your whole portfolio. That does not work for people that are trading 3 things and putting a lot of money in each of those 3 things, because there's little or no interaction between the 3. That's why I spent as much time as I did talking about building a portfolio. I don't mean a trading portfolio. I mean a portfolio of all your wealth, your retirement accounts, your real estate, your stocks, your bonds, your crypto, your cash, your paintings, your racehorses, your numismatic coins, your Chinese ceramics, your furniture, the house you live in, other real estate that you don't live in, but it's investment property. All of that together is your wealth. Whenever you decide you're going to take money from riskless cash and put into any of the things I just said, you can use Consensio to give you clues about the timing of what you're doing. So let's just stick to the things we talked about, which are stocks, bonds, and cash. We didn't talk about bonds. We were going to, because it's a very important element of fundamentally what's going on with these stocks. And we didn't look at Bitcoin, and we didn't look at, but we will do that during this question and answer period. I'm going to pull up the Bitcoin chart just as we did, and I'm going to pull up GBTC's chart and tell you why you should have gotten in when you should have last year, when you should have gotten out using not Hyperwave, just Consensio, and why you should still not be in this market. But so my answer is, there is no answer that fits all the situations. I've given you as best as I could the way I look at them in terms of stocks in very large groupings called diversified portfolios, in stocks in smaller groupings and smaller groupings, meaning sectors and industries and individual stocks. You want to react more quickly at this end of the spectrum, more slowly at this end of the spectrum, because you don't have to worry on these broadly diversified things about pieces going wild over short periods of time. You do as you get into the areas of more volatility, particularly things like Bitcoin or gold mining shares, or gold mining shares in general when they are company specific. Okay, so That's the best I can do to answer that. I cannot give you a formula that works across everything you're going to do, but you can figure it all out, and it's very easy. Just look at the charts the way I did, then go back and find periods that the thing you're looking at had problems before, and compare it to where you are now, and make your own decision of what that's telling you and how much you want to get out.
I know I was muted. Thanks, Ty. Is there some way to determine the strength or weakness of an impulse or trend line? The angle of ascent, oh, it moved, hold on. The angle of ascent is difficult to ascertain since it will depend on the compression of the timeline.
Yeah, absolutely. Time is important. The reason I don't like exponential, I don't like logarithmic, I can't visualize them the way I can the simpler. Simplify, simplify, simplify. You hear that in everything I do. And a lot of people think it's because I'm not smart enough to be able to go up to the next step or the next step. And that might well be the case. And I'm not trying to be disingenuous or humble. I mean, the people's minds work differently. People picture things differently. I resolve everything in my mind, ideas down into pictures, things into metaphors and aphorisms and similes. That's just what I do. And so charts are the same way. You can make it as complex as possible or as simple as possible. I always move towards the simpler side. Okay, if you compress time or compress price, it's going to change angles because of everything I said earlier in the first part of this in terms of what happens in the quadrant that's plus plus starting at 0, what you can do on that chart. So why in the world would you blow that apart by going exponential or exponential moving averages or using logarithmic charts? You want to be able to visualize this period compared to previous periods. As soon as you use a log chart, it's true you can look at more going back and it doesn't, it evens things out, but it also loses a tremendous amount in my interpretations of it. I can't just look at it and draw conclusions, whereas I can with what we just went through. Now, your question about the angles of lines is very complicated. I said to begin with that a horizontal line is stronger than an angular line, but that depends on not so much the steepness of the angle, which can be affected by moving the timeline or the price line or both, but it has to do just with the fact that the only way you get an angle, and now I've got to talk hyperwave because it's one of the few things that looks at the angular lines, angular trend lines in this particular fashion, that says for some odd reason that I don't have the answer for, when you break out of a phase 1, you go up at a certain angle, and then that angle will accelerate 2 more times above it. It won't do it one time and then lower its angle. It will keep getting steeper and steeper. That tells you something about the essence of what this thing is. It's called a bubble, or is called a blow-off, or is called a hyperwave, depending on how you define those things. A hyperwave is far more specific than bubbles and blow-offs. It gives you far many more clues. But it has to do with the 3 phases after phase 1, 2, 3, and 4, going up at steeper and steeper angles. And now the only other thing I'm going to say is on the other side of the top, after you've hit a 4 and you're going 5, 6, and 7, things change dramatically relative to those angles. The angles don't matter much. And the final angle, the 7th angle, doesn't matter at all. The phase 7. And that's why I differ on tone on his drawing of phase 7 on Bitcoin and mine. A phase 7 can constantly move. I'm not sure which way you're looking at it, but a phase 7 will fan out further and further from left to right. The longer it takes to get back to the phase 1 or become a funky hyperwave at 2 or 3. It does not tell you anything if price breaks above the phase 7 that you had before. That is not indicative of any change. You are still going down to the 3 and then the 2 and then finally the phase 1 again. That's not true with any other angle, any other of those lines. Hyperwave, but that's a different story. But it's important to understand the answer to your question is it depends. It depends on what the angle is and is it coming off of another angle or is it a new angle that just began and is going up at a different level. And then, yes, you can play with the time, you can play with the price, and you can see that that angle will change over longer and longer time periods, lower and lower, in short time periods, higher and higher. It's work to do any of this stuff, and I oversimplify, but I think it was important talking about this Consensio concept.
Thanks, Ty. I think your grandson is extremely excited.
Yeah, he is. It's
yeah. Oh, okay. So is Consensio useful for taking short positions? If so, are the entry points the same as the exit points from a long position on the downturn?
No. Yes. Next question. No, the no part of the answer is it is not the same. Whenever you talk about being long or short, it's not the same thing. And I talked about that mathematically in terms of your wealth, meaning that buying and selling is not the same thing in terms of what it does. Most people think of it as 50-50, and it is not. I want to be out of an uptrending market early. I want to be in cash in a downtrending market late. I want the evidence to be that the trend has changed. I'm not going to guess that it's going to change. I'm not going to put money to work when I'm in cash on the belief that a new bull market is starting. I will leave a lot on the table at the beginning of the move because I'd rather be in cash. I don't want to eat into principal. At the top, I'm not in cash. Therefore, I make different decisions going from long positions to short much more quickly than I do from cash into long positions or getting out of hedges or getting out of shorts going into long positions. You need to weigh that yourself, but think of what that means. Now, that also is true about if you're going to short something using Consensio. If you're a trader, you can use Consensio to time your trades. And depending on if you want to do it when the short term turns down or the intermediate, or the short crosses the intermediate, or they both cross the long term, is dependent on how short of a time frame you're looking at, as opposed to longer time frames. I've said over and over, I'm only interested in long-term trends. And very few people fall into that category. And therefore, out of the 100 listening, very few of you do. You're looking at other things, so you need to make up your own mind.
You've mentioned that you're ideally making only a few trades a year. Doesn't Consensio force you into making many trades if the signals come up?
No, not at all. Depending on how long your moving averages are and what they're set to do. I told you that my son, who is just here, and Leah's brother, helped us build a Consensio trading system for ETFs 15 years ago, or 12 years ago, 13 years ago, that only traded every tick of the market hundreds of times a day on 125 ETFs, where we were long or short every one of those ETFs at all times. And Consensio works wonderfully for that. That's a hedge fund, and it's set up differently. And we knew statistically how many would be long and how many would be short, which then evens out the risk of the overall portfolio as long as you stay in all of it. I had a partner back in the late 1970s, early 80s, where we did the same thing using a Wells Wilder system in commodities, where we were long or short 30 different commodities every day, all the time, and our portfolio was those 30 things. But we use broadening tops and broadening bottoms, what we call the Selgin system, to make those trades. Now, depending if you're trading day trades, second by second, tick by tick with ETFs, or longer term swing trades, which what a broadening top and broadening bottom are in the commodity market, or long-term trades on diversified portfolios of mutual funds or ETFs, that will determine the number of trades you have, not Consensio. Now, obviously, we were using minute charts on the ETFs. I'm using weekly charts on these long-term trends, and my 30-week moving average is the one that really signals my trades, although I'll take some off the table. So in a 10-year bull market, we had very, very few trades. You saw on a couple of instances where we would have taken a little money off the table. That's very different than jumping in and out and in and out and in and out. And if you're using no-load mutual funds, there are no commissions. There are taxes unless you're using retirement accounts. So we're trying to go through all of those pieces, but you need to put it all together to understand what Consensio is really telling you. You're in control of the trading, not the system. Ouch, I've got a cramp. Okay.
In the 2000 tech bubble, how far behind the NASDAQ in percentage would we have been before Consensio flagged to sell?
It's a great question, and I am going to do a screen share because that's a specific question to a specific time. And that means what we will do is we will get off specific stocks and we will go to where did they go? Oh, here they are. It's okay, I found them. Okay, indexes. And now we are going to do, I'm going to do the NASDAQ 100 back then, which is made up of different stocks. Oh, wow. I don't know if I can go back that far on this particular template that we've got. I'm sure we can. I can if I do monthly. I'm going to cheat. I'm going to go monthly. And on the monthlies, I can go back to 2000. There it is. We weren't using monthlies. We were using weeklies. What happens if I turn this to a weekly? I think I lose the time.
It should work, Ty.
No, it never does for me.
Let's try.
Boom. See, it jumps the time period because the template's different. Somebody there knows, and maybe they can tell Leah a way to do it, but that's okay. Let's pretend. I can do it by doing the moving averages. Okay, these are monthlies. So the moving averages, we've got to go much, much longer.
Well, Ty,
Yes.
we have an answer. Thank you, Jerry. If you
Great.
switch just at the top, the NDX, the ticker, and switch it to IXIC. Then you can do your weekly. Up top left where the big cursor thingy is.
Up top, which, right or left?
Left.
Up top left. Switch this ticker.
Keep going.
This ticker?
Boom, yeah.
Really?
Yeah, apparently.
But the IXIC, did you say the IXIC, which is the overall NASDAQ?
Yep.
That was what the question was? Well, I can, okay.
Try IXIC. Jerry, you're in big trouble if this isn't it.
Big trouble, Jerry. Okay, IXIC, boom.
Okay, try weekly.
Now you say try weekly. Oh, wow. I've got geniuses in my, well, wait, too early to, nope, doesn't do it. It's because I built this template. All of my charts are exactly the same, and so I would need to come up here and do some funny stuff. So I'm sorry. I can't give you the answer to that. I will tell you we got out very early. We got out very early of the NASDAQ using Consensio because as I've said, I use other things. One of the things I used was Hyperwave. Hyperwave got us out very early, long before the other indexes turned down. This also would have gotten us out, but remember what happened with the NASDAQ in 1999, going to that peak we just looked at on a monthly basis. I'm going back to the monthly because by going to the monthly, I can take it all the way back. This is the monthly. This is an 88% move in the index. That means that the price, which I will now put on top of it, show price, show, boom, went vertical. Here is your phase 4, 3, 4, 5 down, 6 back up through the Consensio lines, and then came all the way down through it all. But on a weekly basis, you would picture that these moving averages crossed very quickly because this intermediate term. I would not, I'm just looking quickly, the pink is staying right with the price as it should. The intermediate was staying above the price. I'm assuming for a second this wasn't a hyperwave, so I didn't have other tools to use. I would have taken stuff off the table here because we had crosses of prices in intermediates and short terms. You would have gotten out at 3,000 when the long term moved down. That was way too late. You gave back way too much. You needed other tools. Thank the Lord for hyperwave. That's such an unusual move. In 06, 07, 08, 09, we missed all of the downturn by using a number of different indicators, but including this one. This is monthly, so we're going to go back to weekly and look at the second example. And you can see the breaking right up here in terms of price at 5,000 of both the intermediate and the short term below the long term. And notice that the long term went flat for a very long period of time, even though price had dropped very sharply down before this run up. This is 2016, and this doesn't go back far enough. Again, we use the monthly. Sorry. Okay. Sorry about that.
Ready?
Yep.
Okay. Can you talk through the expected steps to take to enter Bitcoin once Consensio starts going through its confirmation stages of bullish reversal?
Great. I was hoping for that question, and that means we want to share and pull up Bitcoin, which I promised I would do. So to do that, I've got to go to these magic boxes. I hate magic boxes. And somewhere here we've got Bitcoin. There it is. And so we will start with Bitcoin, and we will do the weeklies, but we will shorten it down to 2018. And we've got the same moving averages. I've got a 3 instead of a 2. And the 3 is too long, but we'll take it. I should be using a 2 because this is a 7-day week, and therefore we only want 14 days as opposed to what we were looking at with the stocks. But in any case, we've got the price below the intermediate term and below the short term, and we've got the short term below the intermediate term and below the long term. We are in a bear market. Now, on a couple of occasions, we have broken above and started these short-term bounces. We've had a total, I count this as 1. I count this as 2, I count this as 3, I count this as 4, I count this as 5, and now I count this as 6. 6 times, each one highs, below highs, below highs. But on each of those run-ups from this tremendous horizontal line that I said in the first part of our meeting today is the strongest of all lines, stronger than trend lines going this way or trend lines going this way, unless they're phase lines of a hyperwave. Phase lines of a hyperwave are the strongest of all angular trend lines. Okay, so the question was, how would we do it? Well, these are weeklies, so let's drop down to dailies. If you're trying to buy something that's been falling for a long time and you're sure that it's going up at some point, drop down on your time frame using Consensio, because it's going to be much more sensitive to turns. This turn, for example, happened a month ago, going way, way up, but then quickly going way, way down, where price breaks sharply below both the short-term and intermediate term. Doesn't get all the way down to the long term, but it didn't really matter because of the steepness of what was going on, blew through the long term and turned the long term from flat back to down again, even on the short term. So my answer to you would be, on Bitcoin, once we get down to where we're going, which, as you know, I believe is a lot lower than we are now, and I could be right or wrong, Tone could be right or wrong, you could be right or wrong, but Consensio will not be. It will be right. So use it as a timing tool, and you can drop down again if you want to. If you're really thinking this is someplace you want to be, drop down to the 4-hour chart using Consensio. This is a 4-period chart now. And what is this one telling you? Oops, we just dropped to 61.82. Okay, what this is telling you is we're still in a bear market, but on a very short time frame, we've flattened out again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's call it. So 40 hours, a little over a day long, and we flattened out once again. As we keep pointing out, is the tendency of this thing to do on all of those snapbacks. The snapbacks, then these flattening out periods, both on the upside and the downside. And those are important. And you can catch them with Consensio if you're a short-term trader. I wouldn't be buying this one, although we're so far below the moving average, which in this case, again, is 4-hour moving average, that we're starting here to look like we're going to do something. The short-term moving price first goes first. Then the short term cuts through the intermediate term. The intermediate term tries to turn up, but actually runs out of gas. And now, of course, everything's turning down and quickly everything will be dropping lower. If price comes back up so that it turns these around, we have the possibility of a short-term bounce up somewhere, meeting this long-term moving average coming up again. That's the way I would play it down at the 1,000 mark. That's the way I would play it at the 5,000 mark, the 4,800 zone up to the 5,400, soon to be 5,500 zone in terms of Bitcoin using hyperwave analysis and other forms of analysis. But you see how easy it is to, and again, forget it's Bitcoin, forget your predilection for what this thing is. We're only talking about timing, about moving cash in or out of something. Is this the time on a short-term basis for a speculator to be buying whatever this thing is? Yeah, I think it is. Without looking at the price, we got the short term stop going down, rolling over. The intermediate term has stopped going down, is flat, but the short term moved above it, which means price is doing something up here. And we got quite a bit of room to go where you can go from 6,100, you can pick up $300 on a $6,000 or a 5% kind of a move on an unleveraged basis. That's a decent thing. Am I going to do it? Of course not, because the longer time frames say this is nowhere near what it needs to do to turn anything significantly around, including, you know, the day chart and the weekly chart. Just nowhere near it, not even considering it. Down, 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 bear, bear, bear. Wait for it, depending on the kind of a trader you are. I want to pull up GBTC just real quick and just see if there's anything anybody sees here differently than me. Let's go back to Bitcoin. We're looking at weekly charts. We've got a flattening out of Bitcoin, which means that that opportunity for a pop back looked pretty good. We are not getting a flattening out of GBTC, as my last calculation showed it having no premium whatsoever, back down to zero. I actually showed it on a short-term basis with a discount. Depends on how you calculate it. I know I calculate it differently than the folks at GBTC on their website. I think mine's more accurate. In any case, what I've been saying all along is that I believe GBTC leads both up and down the price of Bitcoin. And I have no takers on that theory, but I am wed to it. And right now it's working correctly, doing exactly what I would expect. But it also means that Bitcoin should be breaking down here pretty quickly. Okay, I'm stopping sharing, and let's go to the next one. And we are at 6:34, so I've got 30 minutes. And thank 87 of you for still being with us.
All right. Can you use the VIX as a driver for a decision formula on what moving averages to use on the S&P 500?
I have no idea. It's a great question. We just don't have the firepower or the time at this point. Hopefully that's going to change during the next year, and more about that later. But it's a great question, something that tells you short-term movements like the VIX that can be applied to not only big indexes, but a lot of other things, not just the S&P, but can help you. Many, many technical tools can help you in conjunction with other tools. I showed you one example when we looked at the NASDAQ back in 2000 in terms of marrying this with hyperwave. If you can't marry it with hyperwave, you can marry it with all the other things you've seen me talk about, SARs and RSIs and MACDs, McClellan oscillator, you know, all of those things. can help you frame what you need to do at a point in time relative to how big, how long or short your moving averages should be. But
Thanks.
I wanted to keep this as simple as possible.
Are there ratios for moving averages relative to time frames that works well?
Yes, and you could probably figure those out from some of the things I told you today about the three that I like to use, not in terms of time, but in terms of the effect with the asset class. Just be sure that your short one is running through all the prices in both directions. And price doesn't get very far above it or very far beneath it at any point. Then you know your short term is right. 2 might not be right for a lot of things. 3 might not be right. 4 might not be right. On the intermediate term, I think you can do the same thing. It's the long term that's the biggest problem. If you try to fit the longer term to price activity, you're getting too close and you're going to get a lot of false signals. The biggest problem with longer term moving averages is in most cases when you see people using them, the price is so far above them in a bull market and so far below them in a bear market that it renders them meaningless. It doesn't give you, you want to get out as quickly as you can. You don't want to get out too many times on false moves. You want to balance those two things. And if you can do that by using any other technique to help you, then you will do much better.
Can you share with us an example of money management using Consensio? Example, like how you are going to raise cash percentages during a trend shift?
Yes, I can, but rather than show anything, let's just think about it together in terms of what I actually do as a discretionary manager for the accounts that I manage. That's one group of people. The second group of people are people that Lee and I are consulting with, in which we will give our recommendations, but each individual makes their own decisions which and how much of those recommendations to take. Anyone that takes other than what I have recommended, either more or less, more aggressive or less aggressive, is doing something differently than I am doing for my clients, where I've got full control over the buying and selling. And on those clients that I've got full control over the buying and selling, we're not discussing what we're doing, why we're doing it, when I'm doing it. I go by the 60, 25, 15 rule, and I stick with that. And in each of those buckets, I use different time frames on Consensio because they're measuring more and more volatile buckets. But they mean less and less to the overall portfolio as they get more aggressive because the size of the positions relative to the other positions. All of that enters into the money management side. Entering and exiting positions using just Consensio at tops and bottoms. I've already said over and over again today and in every vlog, and I try in the tweets, which are very difficult to do because you can't say very much, that there is a big difference between taking money that's in cash and putting it to work as opposed to taking money out of things and putting it into cash. You don't use the same decisions. I don't use them when I manage money. If I've been very defensive and I have totally hedged all of my accounts out of risk in the stock market, which I did back in 07, 08, 09, I am not going to go by what Consensio tells me about putting that cash back to work. I'll be reluctant. I will lengthen the times. I will be patient. Why? I'm sitting in cash. I have no risk. So people say, what you're saying is you're losing opportunity on the upside. You bet I am. 100% of the time. I'll do it every time. On the other side of the equation, when I'm fully invested like I am now, until I raised a small amount in the small cap and in the NASDAQ, particularly in the NASDAQ 100, because of the activity we just looked at. It did not affect the other broad averages, but they are broad averages in themselves, and they were problematic. So I took a little bit, meaning 5% pieces out of it. It would have been 10% out of it if we didn't have strength in all the other areas and the economy wasn't strong in all the others. So I'm taking the risk for my clients by staying with a long-term trend. But I'm taking some of the risk off the table as things begin to happen. And we're in the middle of that. That's why it's so important we're doing this today. But I want out of those positions as soon as I've got an excuse to get out. And if it takes one by one of things breaking down, I will accelerate what I am doing, because what's happening is more and more evidence is coming in that this is a broader and broader decline, which is going to affect all three parts of my portfolio. So even though I'm tiptoeing into getting out, you will see me moving very quickly next week or the following week as and if more evidence comes in that this is bigger than it looks like. So I want to be completely out before we've given up 10% in the portfolio. We were able to achieve that in 07, 08, 09, where most clients ended up with very minor losses over the full time period of time. Very minor, meaning less than 10%, because that's what the goal was over the entire portfolio. And that's my goal today, and will be 20 years from now, and was 20 years before that, but I couldn't do it because the clients I had there were big institutional clients that wouldn't let me have that much flexibility to protect them from the downturn in 2001, 2, and 3. So I was forced to stay in the market, but make very drastic shifts between growth and value, between mid-cap and large cap, and totally out of technology. And that helped a lot. And over the 5-year period from 1998 to 2003, in institutional money management, we were named one of the top 0.1% of all equity managers in the country for that 5-year period of time, following all the rules that the consultants and the trustees and the institutions placed upon us. But I swore I would never go through that again, where I am responsible for their money, but they've hand-tied me in order from using these tools. I wasn't in 07, 8, and 9 because I no longer managed institutional money. It was just individual money. Long answer, but all of it is important in understanding the question about how you would use Consensio, practically speaking, getting into or out of positions as trends are changing. It depends on all of those things I just said.
Thanks, Dad. This is a comment. I just moved it. And the question's at the end. It makes sense to use Consensio to get out of assets in bear markets and switch to other assets who are in bull markets according to Consensio. This way, cash can do something useful while asset X is in bear market. Trick is figuring out which of all potential bull market assets to choose. Question: what variables come into play when evaluating this transfer from asset to asset?
Great question, and one that will take an entire webinar to explain. But in short, you just saw me go through a number of indexes at the same period of time that we looked at sectors which were all parts of those indexes. And we began to see things that were strong and things that were weak by looking at the sectors that we could not see by just looking at the indexes, because they were hidden in those indexes along with a lot of other stuff, right? So the first thing is you need to divide your assets up, understanding what goes into those assets. Then what we did is we broke the sectors down into industries. Why? Because each sector is made up of 4 or 5 or 10 or 20 industries, only one of which might be so powerful in the opposite direction that it's affecting the overall sector. But now by going industry by industry, we know that. And within each of those industries, as I mentioned, like in regional banks, you've got large regional banks, you've got mid-sized regional banks, and you've got small regional banks. You've got ones that are growth-oriented and others that are value-oriented relative to their price to book. So what I'm telling you is that what you want to do is different as you go from everything being bad, which rarely happens, to everything being good, which rarely happens. The difference between those two things is everything good, which rarely happens, you don't need to use anything. Just sit back and enjoy it. Don't try to switch from this to that. Go on vacation, relax. But not on the other scenario. This is what Edson Gould said. This is why John Bogle and Vanguard and buy and hold is wrong. You never want to have your assets in something like Bitcoin all the time, regardless of all these signals that I've been talking about. And you certainly don't want all your wealth, all your retirement account, to go into a period like 07, 8, and 9, or what I believe we are going to see in the future, and hopefully it's in the far future. But it's coming because of all the fundamental problems we've talked about. So the question is, how do you pick which thing to be in? Well, it depends on what time frame you're in. You don't want to be in anything when everything is bad, which is very rare. The 1920s, absolutely. 1970s, no. The 1970s, the stock market didn't go anywhere, but anything that was inflation driven, like commodities, like oil, like gold, like silver, that's the only thing you needed to be in. And you could take your pick. You couldn't do that back in the 20s. You could do it in the 70s. Now fast forward to what we saw in the 1999, 2000, all the way up to 2010. The stock market was not a good place to be, but you had two chances. One is to get out for the first 3 years. One was to get in for the next 3 years. One to get out for the next 3 years, and you've eaten up that 10-year period, basically just making 3 decisions. One is to get out in 2000. One is to get in 2003. One is to get out in late 2007. And then there was a fourth that occurred when you wanted to get back in. Knowing, looking back over that 10-year period, you haven't made any money. What you did is you lost money, you made money, you lost money, net, net, net. You had a wasted decade. Using Consensio, you could have gotten out, gotten in, gotten out, and gotten in, and done very well. So that's why I say it's a very complicated question, and that's about the simplest answer I can give you at this point.
Where does gold fit in the 25% or in the 15% of the portfolio?
Great question, because both gold and Bitcoin belong in the 15%. So does silver, because they're all single things. But I've told all of my clients, all our consulting clients, that when we get to a bottom in Bitcoin, when we get to a bottom in gold, when we got to the top in gold, that I look at those things differently because of everything you've heard me say about macroeconomics. The stock market in general is designated in US dollars, and the stock market is in general more responsive to the overall economic picture than any of these sub-assets are. But both gold and Bitcoin have the ability to take a major role at various times in controlling all macro finance. Bitcoin's nowhere near it, but I believe it has the fundamental ability to do it. And because of that, I am more than willing to recommend to clients to steal from that 15% pot and put it into the 25% pot, and even put those two pots together for both gold and for Bitcoin, which is a huge percentage of an overall portfolio. But I would never take from the 60% to get into either of them. I would personally, but not for people I'm consulting with or people I'm managing their money for.
All right, Ty. It's 6:52. What do you think?
Wow, you guys are amazing. Thank you so much for the interest, unless you left 3 hours ago, but just left your computers on, which I would not blame you for. But really, thank you. Thank you for all the questions. Thank you for all the interest. Leah, thank you for everything you did to get this set up. Tone, thank you very much for everything you've brought to this entire ecosystem and will continue to do. Yeah, why not? Tone just in the last couple of days has announced a big deal that's going to happen. Take a look at it. It's called unconfiscatable.com. You can go through tonebays.com, but look at unconfiscatable.com. See what he's up to. It's going to be a lot of fun. And Leah and I are going to, for the first time, present Hyperwave in great detail during the conference. The second time, I did it 20 years ago, and that's how a number of things happened, but I quickly shut that down because I needed to use it and keep it proprietary. We've decided not to, and because it's so important for Bitcoin. That's how I got into this space, because Leah called me up and said, we need to do this, not just because of Hyperwave, but all this other stuff we're beginning to talk about that will help people not only in the crypto space, but hopefully on a much broader basis. But it'll be fun to meet everybody there. It's going to be an incredible 3 or 4 days with tournaments, poker tournaments, with talks by some terrific people. Take a look at it. I highly recommend it. And I dropped everything and said, yep, Tone, absolutely. We'll do this. He hopes to do this every year. I think it's going to become a very big deal, and it should, because it is talking about Bitcoin. We are going to have a lot of non-Bitcoiners there that are crypto related, and they're going to be sitting around the poker tables with us. We are going to have a fascinating couple of days of discussions. It will be a lot of fun for everybody. So Lee and I fully endorse it, and it's we're looking forward to it.
Yeah. Wait, Tyler.
Really appreciate it. Yeah.
Ty, well, since we're ending with thank yous, and we had your son come in for a little computer check, we can mention one last time that it was him that found the Bitcoin Hyperwave.
Absolutely, he was. He called me April of last year. He knows all about Hyperwave. He and Leah's brother, Ben, set up Lucid Investment Strategies 10 years ago. They originally owned 90% of it. Now I got 10%. They set up something that is going terrifically well in Chattanooga called verypossible.com. But they both know everything about Consensio, everything about hyperwave. And my son called me up April of last year and said, Dad, take a look at Bitcoin. I think it's in a hyperwave. And everything we've done is because of that call, including us benefiting greatly on the upside during 2017 and getting out at the top in 2018. And we hope a lot of you are going to come along with us for this next ride. It's going to be a doozy.
All right, everybody. Thank you so much for watching. Thanks, Ty.
Thank you, everybody. Bye-bye.